I've got great news for business owners. Did you know that you could create another person who will take all of the blame for your mistakes and who will pay for any damages caused by your mistakes? And all you need to do to create this other person is to make an LLC or you make a corporation, right? Well, sort of. I'll get to that in a minute. Hello, and welcome to episode 5 of the Small Biz Law Line, the small business owner and operator's go to resource for legal and business advice. I'm your host, Justin McInerney. I'm a lawyer by trade who has also operated a brick and mortar business for over 14 years. When you need legal services as a business owner and operator, you should have a lawyer that understands your world. That's me, Justin McInerney. This episode of the Small Biz Law Line is called The ABCs of LLCs and Other Entities. This episode is aimed at educating business owners and potential business owners the ins and outs of the different types of entities under which you can operate your business. So the first thing I want to start with is what's called the BOI report before we even get into the nuts and bolts of corporations and LLCs. Starting earlier this year on January 1st of 2024, Congress has enacted and passed a law which requires anybody who owns a company to report what's called the beneficial ownership information. This report has got to be filed on or by January 1st, 2025. It's a little bit more detailed. I'm glossing over the details just to put you on notice that you're going to need to file this thing with few exceptions, but it applies to just about any type of company, LLC, corporation, partnerships. And if you don't get this information report filed, there's some pretty potential extreme penalties and fines that you're going to face at the federal level. So you can look it up online, BOI report, or you can call me directly and I can help you file the report by the end of the year. So getting back to the matter at hand, what exactly is an LLC or a corporation? I'm going to speak generally about both of them because, as I said, you're more or less creating another person that handles your business. Their other entity could be a nonprofit, of course, but the LLC or the corporation is a method to avoid personal liability. So you, as the business owners or as the owners, plural, of the corporation or LLC, are not personally liable for the acts of the LLC or the corporation. The corporation or the LLC essentially assumes the responsibilities of what an individual would assume. So you do business in the name of the LLC or the corporation, and any act that you do is not going to go to you. It's going to go to the corporation or to the LLC. LLC, by the way, stands for Limited Liability Company. Now, I'll get into that a little while later. But basically, the LLC or the corporation is an independent being. And the main thing we do this is so that the individual is not liable and you can go about your business and with the understanding that you're not going to be exposed to certain problems. But that's not always true. First of all, there's this concept of so-called piercing the corporate veil. In other words, if you're operating your LLC or your corporation in such a way that you haven't separated yourself as an individual from the operations of the entity, then you can be personally liable. The most common example of that is when you treat the corporation's bank account or the LLC's bank account as your own. You're paying personal expenses. You're not giving yourself a paycheck. You just pay for everything through the company without that for expenses that are clearly not business related, vacations, groceries, and so on. So you can be personally liable if you don't treat the company as a separate entity and just run it like a regular company where things are expensed that are legitimate expenses. And if it's a personal expense, you pay for those on your own through your paycheck or through your dividends or through your other income. So, in addition to piercing the corporate veil, which frankly is not all that common. What's more common is that you wind up having to personally guarantee everything anyway. In other words, if your LLC that's 2 months old signs a 5-year lease that's worth it's going to cost $100,000 a year, for example, so a total of $500,000, you're asking a landlord to give credit to a 2-month-old LLC, and even if it's a well-established LLC or a well-established corporation, the landlord isn't going to want to lease to the LLC unless there's some backing behind the LLC, and that backing is almost always in the form of a personal guarantee. So, in other words, if the LLC or the corporation fails to pay rent for your business, then the landlord will have the ability to go after you as an individual because you're personally guaranteeing it. It's just like co-signing a loan. If you've got a family member, a son or a daughter, for example, that buys a car, sometimes the parents are going to be asked to co-sign the loan on the car. And this is pretty much the same thing. Okay, well, the child's going to be primarily responsible on the car loan, but the co-signer will be secondarily responsible. Same is true with these personal guarantees when it comes to LLCs and corporations. Now, a lease is a pretty common and obvious example, but you're also going to be on the hook for a line of credit. So great, you can get a line of credit at a bank, for example, or a credit card in the name of the business, but the lender, the banker, or sometimes the credit card issuer is also going to want you to personally guarantee it. And a lot of times it's not just you as the solo business owner, it would be your spouse, and a lot of times LLCs, corporations are owned by a few people, then they're going to want all the shareholders of the corporation or all the members of the LLC plus their spouses to personally guarantee these loans or the lease, for example. Now, also keep in mind that you don't have personal liability when an accident happens. So if you've got a trucking company and one of your truck drivers who runs a stop sign and puts somebody in the hospital, then that truck driver is operating in the name of the LLC or the corporation. So only the corporation is going to be liable, not you as an individual because you're a shareholder. But if you happen to be the driver of that truck, you're also going to be personally liable anyway, just as your employee who's a truck driver is going to be personally liable. Ideally, that's not going to be that big of a problem because you should be properly insured, both as an individual or the truck driver, for example. So the business is going to have business insurance that would cover you and or the truck driver in my example. So this is another way of saying that you arguably you don't need an LLC because insurance will cover everything. Yes, that's true. If you're properly insured, insurance should cover everything. Whether or not you're an LLC, individuals, especially business owner individuals, usually have or oftentimes have what's called an umbrella policy, which will go up to, say, $1 million, which will cover anything beyond your basic insurance. But at the end of the day, you're going to want to have an LLC or a corporation for the most part if you're going to be owning and operating a business. Now, as I indicated earlier, or suggested earlier, these LLCs, corporations, they're what lawyers will refer to sometimes as creatures of statute. In other words, they don't exist in nature. Corporations have to be created by the permission of the legislature, and in the U.S., it's the state legislature. You go back in history, a long time ago, say for example, the English Crown would create, would allow corporations through Parliament, and they would charter these corporations that would be operating with the permission of the government. Now, you can operate your corporation, and you don't really, it doesn't take much to get permission of the government to set up your corporation and to set up your LLC. So, generally speaking, what types of entities are we talking about? Well, you have your S Corp, which is, and the LLC. They've got a lot of overlap. They are different. The S Corporation and the LLC are what we call pass-through entities. In other words, every money, all the money that goes through the LLC or the S Corp, it just passes through to the owners. If you have a C Corp, for example, think of Ford Motor Company, Coca-Cola, the money that Ford and Coca-Cola make is not passed through to the owners. The Coca-Cola and Ford and so on, they've got to file their individual tax return as the corporation, and then any expenses they have, such as dividends, uh, rent expenses, uh, wages, salaries, you name it, then everybody gets paid their salary and their wages from Coca-Cola. Then those people pay income tax on top of what, if any, corporate tax, the bigger corporation, the C Corp corporations. And those are corporations that issue shares. A lot of times they're publicly traded. The S corps also issue shares, but they're not going to be publicly traded. They're done through the IRS. So your accountant would make an election to run your corporation as a S corporation. And then so all the money that runs through gets expensed, and then if there's any profit and distributions that get distributed to the owner, then the shareholders, then the shareholders pay taxes on what they were paid from the revenue from the S corp of that year. And the same is true with the limited liability company. A little bit of difference is that the limited liability company is not from the Internal Revenue Service. It's a state thing. The S corp is at both the state and the federal level. You form the corporation at the state level, but then you make an election when you file the tax returns and you're saying to the Internal Revenue Service, we have a corporation, not a limited liability company. But generally speaking, for tax purposes, they become one and the same. And for more specifics, you're going to want to talk to your accountant. The S corp has a little bit more paperwork involved, a little bit more filing involved, and some professionals will recommend that you do an S corp just because you become more thorough. And some people say, well, just do an LLC because it's simpler. But ultimately, the tax consequences are going to be roughly the same, and they're both what are called pass-through entities. And you can also have what's called partnerships, of course, a limited partnership, general partnership. The partners are going to be personally liable, except for the limited partners, and they're quite a bit different from LLCs and S corps and C corps, but they're also an option, especially when it comes to real estate. Everything is going to have to be decided strategically when you're planning your business structure with you and your team of advisors, your lawyers, your accountants, your real estate brokers, and so on. But also keep in mind the beneficial ownership report is going to have to be filed for all of those, except for a sole proprietorship. by the end of this year. If you form one, uh, you get an extra 2 months if you formed one this year. But sooner or later, that report is going to have to be filed at the federal level. And in either case, when you have a S corp, LLC, partnership agreement, make sure that those are detailed. You have a detailed shareholders agreement when it comes to an S corp. Usually, you're going to want to identify, basic things like the contributions to capital, who gets paid what, when. You should explain all the shareholders' responsibilities, and because if you don't, this is where lawyers tend to benefit. If you don't use a lawyer, or if you use a lawyer who doesn't do a good job, you could very easily end up with a shareholders agreement that it doesn't work properly when it comes to disputes among shareholders. And this is where, for better or for worse, lawyers stand to make a lot of money, because the documents can be unclear if they're badly written. On the LLC, instead of a shareholders agreement, you have what's called an operating agreement. But as a practical matter, the shareholders agreement and the operating agreement are interchangeable. They basically have to be thorough, and they have to spell everything out as much as possible, so you avoid problems later on. To a degree, I like to think of it as a problem avoidance strategy, maybe an insurance policy. Well-written shareholders agreement, well-written operating agreement will save you a lot of money in the long run if and when there is a dispute with your business partners. Then keep in mind both the LLC and the corporation, they've got the annual filing requirements. The BOI, beneficial ownership report, that only needs to be filed once, or then it should be refiled with the federal government if there's any changes. If the board of directors, if the ownership, it speaks to ownership, not the board of directors. But when there's ownership changes, you're going to need to update the beneficial ownership information with the federal government. But at the state level, whether you've got a corporation or an LLC, keep in mind that there's also annual filings. It's just housekeeping. And then there's fees for your annual reports. But if you neglect to file these annual reports, the LLC or the corporation could be forfeited, and then you're going to have a problem if there's litigation, because in Maryland, a forfeited LLC or a forfeited corporation can be sued, but you can't countersue. So, and I see this fairly regularly, and I'm oftentimes surprised, especially with bigger companies, that somehow manage to miss a deadline, and then the LLC is forfeited or their corporate charter is forfeited. It's a common problem, and it's a relatively easy thing to fix, but you can get caught off guard, and it can significantly hamper things, especially if you're in litigation. So that's about it on the ABCs of LLCs and other entities. Please contact me or head over to my website at jmbusinesslaw.com, where you can drop me a line and ask me anything about small business, the intersection of small business and the law. And you can also see me on my YouTube channel, and look for me on other social media, LinkedIn and TikTok. So don't miss out on future episodes. Subscribe to the podcast, and I will see you next time on the Small Business Law Line.